what VSA was actually based on. And it was nothing but the Wyckoff trading method. I just studied and practiced Wyckoff more and more. I became intrigued with what exactly Tom Williams has done with this Wyckoff method to give us volume spread analysis. That is exactly what we are going to explore in this video today. Today, volume spread analysis forms an integral part of my trading arsenal, and I can't recommend it enough to anyone who is just starting out in this field of business. So what is VSA or volume spread analysis? Volume spread analysis, as the name suggests, is a technical analysis method which tries to make sense of the markets by looking at volume traded on each bar, the range or spread of the bar, and the position of the close. What Tom Williams did was he combined all these parameters together to come up with combinations which gave us an idea about what exactly market is trying to do on any given bar. These combinations show up as signals on individual bars, and that is where it all went bust for me. In those days, like all beginners, I spent most of my time in backtesting, system development, and scouring through tons of buy-sell systems to find that holy grail, which obviously does not exist. So volume spread analysis is not just a buy-sell system. It is a collection of signals that denote a particular market situation on any given bar. Volume spread analysis consists of three main components. The first is volume. Volume denotes the strength behind any market move. If the market is moving on decent enough volumes, that progress is considered to be supported by the smart money. On the contrary, if abnormally high volume is recorded on a bar, we can argue that smart money have used higher prices to offload their inventory. Too low volume will suggest that lack of interest and smart money participation. The second component is spread or range of the bar. It is the difference between the high and low of that bar. It shows the results traders have achieved by putting in their efforts in terms of buying and selling. So, more the efforts, more should be the result. Higher the volume, higher should be the range. But if there is higher volume on a bar, but the range of the bar is narrow, it tells us that there is strong opposite activity present in the markets. On the contrary, if you have a very wide ranging bar, it might also denote some sort of a buying or selling climax. The third component is close of that bar. We use the close to find out which way the scale is tipping in favor of buyers or sellers. Usually, a close is compared to the open of the bar to find out whether a bar is an up bar or a down bar. But in VSA, we are comparing the close with the close of the prior bar. So a higher close will give us indication that buyers have control, and a lower close will give us indication that the sellers have control. But if everything was so simple, trading would be easy and possible for everyone. So the second thing that we compare the close with is the high and low of the same bar. It helps us find out who is winning on that bar, buyers or sellers. So how exactly can you use volume spread analysis? Now, before I answer this question, I would urge everyone to start using volume spread analysis. It is simply an amazing tool to understand the behavior of the smart money, and the fact that Tom Williams condensed the whole Wyckoff method into a simple and effective tool like VSA is amazing in itself. So you can use volume spread analysis for the following purposes: to understand the behavior of smart money on bar by bar basis, to find areas of interest for smart money which can provide support and resistance going forward, to understand what different time frames are doing at any given point in time, to improve the timing of your trades, to find definite entry and exit points for your trade once you have solidified the trading idea. Now, the key points here are solidifying the trading idea and not entries and exits. Can you use it with any other tools? And the answer is absolutely yes. VSA is like potatoes. It goes with anything and everything. But at Dean Trading Framework, we combine it with some really vital tools which by themselves are really strong, but when combined with VSA can give us some really fantastic results. And in Dean Trading Framework, we combine it with VWAP and volume profile. Also, we are using volume spread analysis alongside market profile and order flow. This makes volume spread analysis a part of a complete and a much bigger framework. Now, if volume spread analysis is so good, why do we find the need to combine it with other technical analysis tools? This is a question I often get asked, and Here is the answer. So why use a framework? Even though VSA is a very strong tool in and by itself, there is a potential for traders to misread it or misuse it. I myself have been guilty of using volume spread analysis as a buy sell system for the longest of times, and I have paid a heavy price for this mistake. The benefit of combining VSA with other equally powerful tools are as follows. It will prevent you from misusing it as just an entry exit system. VSA is a great timing tool, but it is very easy to fall into the trap of looking at all VSA signals as potential buy and sell signals, entry or exit points, and putting it in a bigger framework will help you avoid that. Combining VSA with a bigger framework will give you a sense of a bigger picture, a broader perspective, so to speak. It will help you avoid tunnel vision, getting focused on small details in trading, which is basically the number one reason for over trading in markets. So how do you begin with volume spread analysis? Well, I have already made a few videos on this topic and I plan to make a ton more videos going forward. So just stay tuned and watch all the videos on this channel and you will be able to figure out what VSA is all about. But if you're really intrigued and you want to include this in your trading arsenal, and subscribe to my quarterly memberships, which again are available in Hindi, English or combined, to learn the complete trading framework of which VSA forms an integral part. I believe this quick introduction to volume spread analysis helps you with understanding or starting out on the path to learning volume spread analysis in greater detail. Thank you for watching this video till the end, and I'll see you in the next one.